Hello, good evening, everybody. This is Market Michael here, and it's 9 o'clock, and the madness does not stop. There's nonstop action in the markets, and there's nonstop things that we need to cover. I just wanted to give you guys some backing, or not backing, give you guys some logic, give you guys some evidence that you could look up for yourselves and look. So, first of all, now these are kind of reasons on why we are in the situation that we're in, guys, right? So, we got market drops, right? Market drops. So these market drops in January were absolutely huge. That changed price action. That dictated we were in a bear market. We have some of the biggest gains in bear markets. Now, next is the yield curve inversion. Now, this only happens during times of recessions. Yes, it was rebutted, saying that because they lowered rates so much that it's inevitable for this to happen. But it's happened every single time for the last, I don't know how many years that we've had a recession, that the yield curve would invert. Under 4%, under 5% really is the area of danger, which once we go down below, that we don't come back up. So we've already entered that, and we are heading into a recession. And that is already one factor that's compiled onto the rest. And now we have higher rates. Higher rates are going to make it they're um not only higher rates, but the way the Fed is handling this situation. They are tightening the balance sheet. So they're tightening the balance sheet, guys, right? Tightening the balance sheet. They are raising rates, and not only are they just raising rates based on good data, but they're raising rates based on the data not being horrible. So the data is sluggish, and now that's good enough for them to raise rates. So they're just higher rates. You know, it's gonna destroy the liquidity in the market. Now, what this market, no, not only the market, what this economy is built on is liquidity, large amounts of liquidity. I made a video on this called "The Banking Crisis of 2018." We are in the brink of this liquidity crisis. Now, I follow this guy, Money GPS, David Quarantino. Great guy. Love him. Love him, love him, love him. All I gotta say is great things about his work. He does so much work, I don't know how he does it. I don't know how he does it. He finds so much good information. I just don't know where to start. But anyway, he did a good video about the auto loan bubble. And that's right, I can drink off the job. So he was talking about the auto loan bubble. But oh my god, maybe I can't drink. So the auto loan bubble, and he was talking about how it was a big problem, and that more companies were doing these loans. Now I also heard that not only are they doing subprime loans in general, but they're calling it something else. So it's a loophole in the system that they're still doing these risky predatory loans, but they're calling it something else. And now these loans for this for the you know all this cheap money is going to disappear. This liquidity is going to disappear. The point I was trying to make with David in Money GPS, go check out his channel. Not only check out his channel, but his information kind of breaks it down for the average person, and he's un it it's unbiased, but he puts a nice David Corantino spin on it, or however you say his name. I really enjoy it. Really, really, absolutely enjoy it. And honestly, one day I would love to be to see him, or make a video with him, or even just chat with him. Very interesting guy. But anyway, we're both seeing it how it is. I, of course, have a complete bias on the whole thing, though. That's what kind of makes me who I am. I have this bias that I take with me, that you see in my personality, and I have a resentment for globalism and what these elites are doing, where he kind of just breaks it down for you fact by fact, and by the end of the video you're going, oh my god, fuck them, I can't believe they're doing this to us. But I'm the other way around. I guess it's me who's got it wrong, who's saying F the government and this is why. He's saying this is why everything's bad, and then that's that. But what we got going on is these higher rates in the government, the way, oh, that debt market implosion. That's what we're talking about. Well, what is a rate? A rate on what? A rate on debt, a rate on borrowing. That's what the rate is. So those two are highly intertwined. And when you dry that liquidity up, you dry economic growth up. So so what we're seeing is that there is zero growth when the banks don't dump liquidity into the market. When they don't print a bunch of money and let things go haywire. That's what we see. We see nothing. We see zilch, nada, and now we've gotten to the point where we can barely even get off the ground with the Fed dumping money into the system. So imagine that. Imagine a world where we can't even get GDP growth with dumping liquidity into the system. And eventually that's going to be the case. Oh, I'm hitting all my points before I even talk about them. So the sluggish economy is a finite thing that's going on that people aren't recognizing. Now, even Fed official members are recognizing that there is slowish growth and that there has been slowish growth, but no one seems to cover it. Now, I don't really know why. I can't understand that. And to me that is the shocker, is that, they say the economy is fine. How is the economy fine if it's sluggish? Of course, we don't want something so fast and so, that like China's GDP is so ridiculous. They're spending so much. It's they have ghost cities to show for that GDP. So at the same time, you don't want it so high, but at the same time, to eke out 2% GDP, I mean, that's pathetic. That's pathetic. That means the money velocity is decreasing substantially, guys. This sluggish economy is going to, okay, this is major. 70% of GDP is consumer spending. You hear that, guys? So if the if the economy is sluggish, that means 70% of sluggish activity is happening with consumer spending. Wow, isn't that something? Can you believe that? Oh my god. Well, there you go. I just blew the bombshell off the fucking door, guys. Okay, so blew the fucking doors off that. Consumer spending, zilch, zada, nothing. Peter Schiff did a great piece on the Apple iPhone 10 and saying that there wasn't enough demand for, or that people weren't upgrading to the next phone. That's because people don't have the money to upgrade. I still got the 6 Plus. I remember back in the day I used to get, I would want the newest phone. I would want the newest phone, want the newest phone. And then last phone I got was freaking, I believe, in high school, and I still had the same phone. So, when I had when I had to pay my own bills, it taught me a lesson that I couldn't afford a new phone, So I'm stuck with the one I got. So that's the way it is. And that's the way most of the economy feels, whether you like it or not, and whether you're a part of that sluggishness. What's important is savings, guys. And when there's more savings than spending, then the economy decreases. But that's not how it should be. How it should be, guys, is that we have an economy that you are able to save saving is where investment comes from. That's where capital comes from, not from um, fractional reserve lending, not from that scam. No, 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 guys. No, 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 no. No, 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 no. No, no. Investment comes from real savings. Ask any millionaire. They're paying card hold, cold hard cash to do a startup, something. They're not taking loans. Any smart person isn't taking loans. That's what I would always make sure to save my money, because I knew capital comes from savings. I swear, I literally am the soul of a person from the 1920s who has the Great Depression fucking syndrome, where I'm fucking stashing money in the walls. Did I tell you guys that story? If not, it's the perfect time to tell you. So my grandfather, I was over his house, and he was telling me about a friend he used to have, who he had the Great Depression syndrome, and he was very cheap with his money, and he had a good amount too. But he would put the money in his walls, and he hid it, and he had a lot of money in his walls. But the walls were all he hadn't painted for like 30 years or something, and the paint was peeling off, and all this crazy shit. And you know he had an old TV, and he lived through the depression, and what he experienced was so traumatic that he was never able to let go. And I have that same mentality. I am not able to let go of the reality of the situation. The reality is that these guys are fucking it all up for us. The Fed is fucking fucking us over, guys. If you don't see it, then it's not only the Fed, it's the government. It's a whole big conundrum of issues we have compiled on each other, and it's really hurting the liberties, it's hurting the freedom, and it's hurting the the happiness of everyone. Everyone's stressed, and when the market crashes, when the economy goes into recession, it's painful. People lose their jobs, people go starving, and the problem gets worse. The government digs a bigger hole, we go deeper in debt, and it just continues the cycle. I didn't even reach my last point. I went on an epic fucking rant that lasted God knows how long. But anyway, this end of a 9 or 10 year bull cycle is on our doorstep, guys. I don't know if it's 9, I don't know if it's 10. I think I had a few too many. 9, 10, same difference. One of the longest in history. I believe the second longest, if not the longest. So, with this yield curve inverting below 5%, there's no chance. No chance, guys. No chance. Absolutely no chance. I mean, cut it how you slice it. I, I, I've been looking, guys. I've been looking with the fucking microscope for 3 years on on when the economy was gonna crash. And in 2015, I was going, I was crying wolf. I'm writing in my fucking trade journal. It's gotta be, yeah, it's right here. Oh god, I want to go through it with you guys. I should make videos just on what I have in this trade journal. Look here, ready? Crisis times. Uh, just a thing of what I needed to do that day. Um, oops. What the fuck? All right, guys, this is a failure. There's too much to my trading journal. It could be in the beginning. Government interference equals less competition. Great, that's absolutely true. Wait, what's this? Huge. Mortgage rates at high. All right. This is 11, 11, 16. Ready, guys? Uh, Huge. Rates 11-year note. Who uses 11-year note? I must have fucked up. 2.13%. Mortgage rates at highs. Some correction of price impact equity market. 10-year going up 2.35 to 2.37. Now look at that. That 10 years at 2.9, baby. No man's land. Oh god, that's great. Industrials, financials pull back. Rates up. Nominal GDP. Oh god, I don't know what I wrote. Gold. Fangs. Bubble past. Oh, wait, gold no sold off. I don't know what's real. Kevin O'Connor. Paul Atkins. Ray something. Trump. What the fuck was I into? My god, I must have been stoned out of my gourd. Whoa, what's this say? Okay, I'm getting way too sidetracked, but I'm taking a walk down memory lane here. The only reason I keep this with me is for solid information. Okay, ready, guys? Every day is a new day. That's for damn sure. And that's that, guys. Well, what we got going on tomorrow is the home price index, new home sales, consumer confidence. Now, consumer confidence is supposed to dip. I think new home sales is supposed to be up a little bit. Now, let's get into what happened after hours, perhaps. Okay. Gold taking a big hit. Oh, God. Is this going to kill gold? I don't know. Are we going to hold support? Oh, taking a big hit. I was like, I thought gold was going somewhere, but whatever. All right. Look at this. Look at this, guys. Look at this. Higher lows. What's that indicate? Well, it's on the way of going. Let's pop up a different time frame. This is gold. This is Nasdaq futures. Again, we're coming down. This is look at this spike. This happened within a minute, guys. This was 30 points in a minute. I guess this is continuing to decline. We're at the bottom though, so we're probably just going to remain flat for the remainder of the day, or the evening rather, through the Asian markets, European markets, all that shenanigans. So that's why I'm so bearish. Is because of all that I just talked about. Is why I'm bearish, and you know, we look at here. We're starting this negative activity. Eventually, we're gonna come down. Whether we get a doji tomorrow or not, whether it's just a complete black Tuesday, whether it's a turnaround Tuesday, and then fucking fail it Wednesday. It's going in one direction, and that's south. From here, I don't see us getting support at these levels. Possibly a little lower. I'd see us getting support, but again, that 10-year ain't really moving. It's not trading right now. When that 10-year moves a little bit, I suspect we are going to decrease the gap a little bit, remain below that point 0.5 area. Well, I guess this is it. It's been a 20-minute video. It's been a great time with you guys. I'm enjoying this nice, lovely evening. But the market never sleeps. It's always working. We're always thinking. Trade ideas never stop. We're out here. We're grinding. We're trying to do what we got to do. And that's that. So, thank you very much. Please like and subscribe. I will see you folks tomorrow. Tomorrow, motherfuckers. Bright and early. 6 o'clock. That's when I get up. 6, I'm on the computer around 7, but I get up at like 6:30. It's hard for me to get up that early, but you know, because nothing really moves. Honestly, there's nothing really to report on. Like I could report the futures to you guys, but it's almost redundant. You can almost watch my videos now and tell the direction of the futures, perhaps. No, it doesn't. The futures are futures, and they're just gonna keep changing. So maybe I should do that, but none of you watch me, so it's almost a little pointless for me to get up at 6 in the morning just for you guys. I think 7. If I get a video out by 7:30, 8 o'clock, 8:30, that's fine. That's plenty before market open. Well, thank you very much. I hope you enjoyed this special late night edition of Market Michael. And as always, have a lovely evening and take care.